Hey, good morning, everybody. Welcome to another daily market report brought to you by Mike Bjork here. And happy Friday to you all. It's August 3rd, and we just got a couple economic news releases scheduled for today, so we'll keep this kind of short and sweet for you folks. We'll start off with the non-farm payrolls for July. Basically, this is job creation for July, the month of July, brought to you by the Bureau of Labor Statistics. And we had 64,000 jobs that were created in June. We figured that number might increase a little bit to 100,000 in July. There's a forecast, and the actual came in to 163,000 jobs. So that's a nice number to see here. Unemployment rate for July, we had 8.2%. We figured that would remain the same, and it had a slight increase there. So obviously, unemployment rate went up a little bit, and that part's not good, but the job creation obviously looks better. ISM services, so this is the services industry index for July, and anything above 50 is expansion, even though, so obviously like 52.1 is very modest expansion, but still expansion. So June we had 52.1% growth. We figured it would tamer down a little bit in July, and forecast it jumped up a little bit to 52.6. So that's a nice number to read, or at least it's better than what we're forecasting. So it came in better than forecast. So now we'll jump over to the headline news. And the stock market's up. And they're kind of like in the job numbers, really what's creating the stock market, the lift in the equities market or stock market here. And also there was some talk about Spain maybe coming in and making a formal rescue request, primarily due to they're having difficulties refinancing their debt, and try so that way they can keep up with the payments and such, so they're not having to need a bailout. Now we'll go ahead and jump over to the bond market, see what interest rates are doing. We end up below the 10-day moving average. We had a huge yesterday, and today we jumped below the floor and are right now 12 basis points even further down. So we are a total of about 31 basis points lower than where we were yesterday. So we do have a definite price worsening for interest rates. So interest rates have crept up a little bit due to the pricing. But also don't be scared. A lot of it's emotional based on the job numbers. At some point, probably early next week, we might see this close up, as typically we have this huge opening gap here, and as we see, these gaps typically will close at some point. Like we had this here, we had the close up over here this past week. You know, like over here, we had some of these closures. Some of these past ones over the last couple weeks were closed this week. So don't be surprised that this gets closed and we have an improvement in the interest rates. This might be a little dramatic push on the stock market side with the job numbers, a little overly optimistic perhaps. So, all right, folks, so interest rates are a little bit higher today. I hope you guys have a wonderful weekend, and thanks for stopping by and watching. If you like these programs, stop by Mike's Daily Market Report, subscribe, and you can have these emailed to you on a daily basis for free. Have a wonderful day.